coming up next. Stay tuned to learn more about the state of the art in blockchain and cryptocurrency technology. Reimagine 2020.
Everyone, I'm Joshua Rivera. I'm the General Counsel at Blockchain Capital. Really excited to be here at Reimagine 2020.
All right, everyone. It is Patrick McLain, one of your hosts for Reimagine 2020. I think a lot of you guys know me, right? Whether you're a student or project in the space. We've been having a lot of really interesting conversations, right? And I think one of the things we try to do here is kind of cover the gambit, right, of talking points. I think it's really important for people to understand each aspect of what's going on in the space, right? Whether you're an investor, whether you are building in a project, whether you are an innovator or an educator, whether you are concerned with legal and regulatory requirements, right? It's really hard to kind of approach this space without, I think, taking multiple aspects of it into consideration. So I'm really excited to bring Joshua on. I'll let him introduce himself before I butcher it too much, but I think what Joshua brings to the table is kind of twofold, and I'm sure it's probably more than that. But at face value, right, not only is he exposed to the investment side, right, in a really real way from the blockchain perspective, but he also is very aware of the legal side, right? So it's hard to kind of combine those two things. So before I talk too much, Joshua, why don't you go ahead and introduce yourself, tell everybody, why you're here, and maybe a little bit about how you got into blockchain.
Sure. Joshua Rivera, as Patrick said, I'm the General Counsel at Blockchain Capital. I've been at Blockchain Capital for almost 2 years now. And like Patrick mentioned, my role is twofold. So I do kind of all the legal stuff, all the day-to-day legal stuff for the investment firm, but I also sit with the investment team and help think through potential portfolio companies that we may invest in. And the reason why it's important to have legal or regulatory expertise in that role is because there are a lot of gray areas in regulation with respect to this new technology, blockchain. And in particular, how we handle digital assets. So a lot of our rules and regulations that might or might not apply to this space were written without any consideration of digital assets. So digital asset is the category of digital assets is a new paradigm here. So I help the team think through what potential risks are involved and how our portfolio companies could navigate those risks. Blockchain Capital, I'll say a little bit about what we are and what we do. So we're an investment firm. We are a venture capital, in particular, investment firm. We invest in companies that are building in the blockchain space, that are creating cryptocurrencies, that are providing services, either kind of custodying cryptocurrencies or digital assets, or providing other types of services within blockchain ecosystems. We've been around for about 7 years. Our founders, Bart and Brad Stevens, were early investors in Bitcoin. And they, when they wanted to get into the space, they saw that there wasn't really anyone, or there were a few, but no one who was really focused on investing in this space. And so they decided to start Blockchain Capital. We've got 4 funds, and 5 funds now, really. But we have an AUM of 360 million across those funds, and we invest in every stage. So we go from seed stage, even pre-seed sometimes, all the way up to your C and D stages. And usually we are seed stage will lead around between $100,000 or $500,000 and $1 million, and we write checks up to 50 million. So we have the benefit of seeing a lot of the ecosystem and really sitting kind of above the industry and seeing kind of what's happening in all the different verticals in that industry. It's been a lot of fun for me to be a part of that for 2 years.
I can only imagine, like, the insight you guys get is probably like, people could peek around that curtain, right? Like, I can't imagine that you guys don't have stories to tell or lessons that you've learned. I want to hear a bit more about blockchain capital, because I think the people on the call, whether you're a student or the general public, I think it's important for you to probably kind of hear a little bit more about blockchain capital. I think A, their story is interesting. I think B, they're probably one of the leaders, right, when it comes to blockchain investments. I think as we've kind of broken away from the ICO phase, right, or various forms of funding, and maybe there's a little bit of a pendulum swinging back to institutional investors, blockchain capital probably is one of those leaders, right? And as an opinion, I think that really needs to be heard. But before we kind of pivot to that, can you tell me a bit? I mean, obviously you're a lawyer. What was your evolution? I mean, like, did you one day, were you always like, I'm going to be a blockchain lawyer before it was out? Or like, what was there a pivotal moment? Like, why does this interest you? And how did you kind of like end up here?
Yeah, so it's a great question. So I started out early in my career doing nothing related to tech or blockchain at all. I was a kind of capital markets and finance lawyer in New York. I did that for a number of years. Didn't love it, mostly because I was working across from large banks. And so my contact person would be the VP of such and such. And they really only needed, our legal expertise for our kind of marginal expertise, and to kind of do all the administrative work that they didn't want to do themselves. So it just seemed very rote and impersonal. So I wanted to change. After that, I moved to Cooley, and at Cooley, I started doing venture capital. I started doing some IPOs, particularly in the pharmaceutical industry and biotech industry, which was a great experience. But I'm not kind of a medical guy, and so it wasn't kind of exactly what I wanted to be doing. But I did love the venture capital stuff. And that kind of opened up a different world for me. I'd always been interested in tech, but kind of growing up on the East Coast and being in New York, tech was not an epicenter until I got to Cooley and started working specifically in tech. And that's when I got introduced to blockchain and crypto. And, I unfortunately had seen, in 2012, kind of had read about the Silk Road case and thought, Bitcoin, interesting. Maybe I should look into that, and kind of never got to it. And then, 4 or 5 years later, ended up realizing just how incredibly paradigm shifting this digital asset was going to be. And so I got really interested while at Cooley and started working on that. And at Cooley, I had the opportunity to work on a number of different deals, including ICOs and pre-token sales. And so that's really kind of how I got into the industry, was working on that and really understanding or getting exposed to the regulatory gray areas here, which was really exciting because I saw it as an opportunity for us to really begin shaping a new framework for law. And so that was great. At the end of 2017, I had advised on maybe 15 deals and 12 clients. And so at that point, I'd done a lot in the space and decided I really wanted to jump in full time. And being a big law firm is really difficult to devote all of your time to crypto and blockchain. So I was fortunate enough, blessed enough to run into the guys at Blockchain Capital. They were looking for a general counsel, and I was really excited about what they were doing in the space, and having the opportunity to be an investor in the space more than just a lawyer in the space has been excellent, and really allows me to not just work on deals that my clients bring me, but really see everything that's happening in the industry, and that's been really invaluable professionally.
And real quick, before I kind of want to pivot a little bit to the conversation of Blockchain Capital, but last point, because I think it's interesting what you're saying. And I'm always very intrigued when I see like the traditional venture capitalists or the angel investor, et cetera. And I think a lot of them are still sitting on the sidelines. I think there's a multitude of reasons why. Where I've never found somebody like I've never met investors who go, I don't do SaaS, right? I don't do like this technology, but like you will find people that are, that say I don't invest in blockchain, right? And maybe there's some stigmas from before. What are some interesting lessons you learned kind of crossing over from traditional venture capital to, I guess it's still traditional venture capital in a lot of ways, but like with the blockchain twist? Like what were some interesting lessons you took away there?
It's a great question. So we are very unique in that we focus 100% on crypto, 100% on the blockchain industry. There are very few investors that do that. There are more now in 2020 than there were 2 years ago when I started with Blockchain Capital. There are maybe 5 firms that did it. Some of those were or maybe 5 kind of bigger ones. Some of those are hedge funds, and then a couple of them were venture funds like ourselves. And I think people in the investment world really hesitate to even touch the space for a number of reasons. I think the first and biggest reason is that they don't understand it. So even if you understand kind of broadly tech or a specific tech subset like SaaS or even fintech, the newness, kind of novelty of blockchain technology, and even some of the cryptographic elements can be intimidating, and they take time to kind of understand and wrap your head around what are the technical considerations and concerns on these protocols. What are the game theory issues that we have to consider? Like how can people game systems, right? And that's kind of one of the foundational issues that we have with blockchains, is that they need widespread usage in order to remain secure. So all of those different concepts are unfamiliar to a lot of investors, so they choose not to kind of jump in. For us, what we have seen over the last 7 years is we've seen kind of an industry maturation. Because I guess a third reason why other investors are hesitant to jump in is that it seems the industry seems very immature. And so you I think they think of everyone who's in this industry as kids who are in their mom's basement wearing pajamas, playing video games all day, and smoking pot. And there's certainly a number of those types of people in that industry, but there's also a lot of grown adult professional people who have come to the industry as well, and that's just not as well known because it's not as headline grabbing. And so what we've seen over the last several years, we've seen an industry maturation where you have real professional investors take serious looks at these protocols and at these digital assets, not just like, oh, it's 2017. If I drop $1,000 into this protocol, then 3 months from now I could be a millionaire, right? Like that type of investment arbitrage is not something that we are really looking for. That's not how we invest, and we're here because we believe in the long-term value of the technology, and we believe that it is going to be transformational for how we do commerce, for how we live life, for how we do business, for how we take care of our wealth and our value. And so we are taking kind of the mid to long-term view with almost every single investment. So as that becomes more common, I think we'll see other investors start to look at the industry and say, okay, it seems like it's safe now, or it's better than maybe I thought it was 5 years ago or even 3 years ago, because we have done a lot of work to bring the standards of our profession up to the traditional venture capital standard, the traditional institutional investor standard.
Got it. So I think a point on that, like when we talk about like, validating it or making it acceptable, right? I think one of the stigmas here, for better or worse, has always been like a lack of like regulatory clarity, right? Now you could question why. I think there's certain jurisdictions which clearly, they provided regulatory sandboxes, they provided framework that kind of, I think, fosters more innovation in the space with people not looking behind their back at every turn, right? Well, I think maybe in the States, you could say maybe they have left some ambiguity on the table, right? Which you could say maybe took away from, or was a much needed step towards, right, really protecting like certain elements of people getting involved. But from your guys' perspective, in the last, I feel like 2 years ago there was like hardly any regulation. I think we've kind of seen the pendulum swing. It appears like, at least from the SEC side, when it comes to securities offerings and kind of how people are using crypto as like a fundraising mechanism. But do you guys feel like that's kind of getting solved, right? When I see like the Libras in the world on stage at Congress kind of getting beaten up, right? Like I feel like on one side it's like, hey, we're not open for business. On the other side, I feel like there's like countries like China and India, everybody's kind of jumping in. So I feel like there's also from certain regulators that they don't want to be the last person at the party, right? So what's your stance there generally?
Yeah, so it's still a very amorphous space, regulatorily speaking. Now, I'll preface this with I do have a background at Cooley. I did participate a lot in the SAFT white paper, the SAFT protocol, in terms of kind of conceptualizing that and applying it to clients and protocols. And so that's kind of my school, and there are a number of lawyers that have different views, a number of lawyers in the space that kind of have different views from me. So it's a bit controversial, but my view, and this is a personal view, is that the U.S. has not done a great job. The U.S. regulators have not done a great job in providing a space for the industry to innovate and develop. And I'll kind of pitch my view a little bit by saying this is both a kind of a view from my regulatory and legal experience, but also from my investment experience. So a lot of the conversations that we have with our existing portfolio companies and prospective portfolio companies revolve around how they can avoid being under U.S. regulation. Not in any kind of nefarious way or dark way, but just say like, look, like we want to build something that that we think doesn't really fit the existing regulatory paradigms that the U.S. has established, because they haven't really done work to update or apply or kind of reassemble those frameworks to include digital assets. So how can we think about building what we want to build and making it available to people, but just not in the U.S. And so that's a normal conversation that we regularly have. And I think that's been problematic for U.S. innovation or innovation that will benefit the U.S. And so we are constantly trying to work with both our portfolio companies, but also regulators, to talk about ways that regulations, particularly securities regulations and money transmitter regulations, those are a little bit more widespread with FATF, which is a kind of a global organization that adopts rules and expects its member countries to implement those rules with respect to how value is transferred between financial institutions. So we spend a lot of time trying to think with regulators and with portfolio companies on how we can operate within the system, because obviously we prefer if the best companies in crypto and blockchain are US companies. We love investing in companies that are based in San Francisco, companies that are based in New York, companies that are based in Austin, companies that are based in other parts of the United States. And we believe that because of the transformational nature of this technology, it's going to be like the internet, where we are going to, as a country, want to have the best technology and the best minds working here for our benefit for in this new space. Other countries, I think, have done a better job. Singapore has issued kind of guidance that categorizes digital assets into different types of assets that have different regulations and different rules. Japan has done something similar. as you mentioned, China is very much blockchain, not Bitcoin, or blockchain, not digital assets. But nonetheless, they are focusing very intently on developing that technology within China. And so we're seeing this a lot. Switzerland has also issued regulations that help the industry, the blockchain industry, innovate and develop the technology in ways where they don't have the same kind of financial burdens that come with a lot of the existing financial and securities regulation. So one thing in particular I'll mention quickly that comes to mind is the SEC has kind of formally or informally suggested that a Reg A plus offering is a good way to go about offering your digital assets. And there have been a couple companies that have taken advantage of this. So Blockstack was the first one, and then YouNow with their props digital assets, they were the second. And that's an avenue to kind of issue digital assets underneath the existing securities regulations. However, I think that there have been a number of problems that have attended that type of digital asset issuance. So for one, there's no true place within the US to trade those digital assets. So if you hold on to stacks, you can't sell them, you can't exchange them, even though they're registered, or what's called qualified with the SEC under Reg A plus. There's also a number of questions as to whether a digital transfer agent is needed for those transactions. And then the cost associated with that process is really large. It's not an easy process for startup companies or startup protocols to use. Estimates are between $1 million and $2 million a year in reporting, and even kind of starting that process. So as investors, we're very not interested in funding that type of regulatory arbitrage for a startup company. So that's just kind of one example. There are others. We're hopeful that the US will kind of come around, but we're worried that by the time we have sensible regulation in the space, that there will be other jurisdictions that will have far surpassed us, and that will be kind of better positioned to innovate in the space than we are.
Got it. And by the way, super interesting conversation. Like I love this stuff, and I'm always actually like just intrigued by what's going on, right? Like what really intrigues me is it's in a lot of ways I feel like, especially in the US, it's not that the answer is no in a lot of cases. It's just that there's no guidance, right? So it kind of provides a vacuum, and like in that vacuum, it kind of, I feel like, and obviously you know it better than me, but like leads to, again, people just looking over their shoulder and kind of inaction, right? Where people have concepts of innovation, they have motivation, but they kind of don't take that first step in some cases, whether it's, financially burdensome, right? Or they don't want to go to jail, but like they don't want to think about going to jail 10 years later because of some coin they created in their 20s, right? One part that you mentioned, and I think is maybe very interesting for the audience listening, and I would say, I don't know, maybe 15% max of the people watching right now. So I know we have a few thousand college kids watching right now, and then a few thousand more minimum in the kind of the general blockchain space. You mentioned a SAFT earlier, and I'll kind of just, I want to zoom out a bit. I want to pass it back to you because I think it's important for people to kind of have some context here. And I think in a place where they probably wouldn't be able to understand this clearly. So I think I'll give my little spin. If you go to Silicon Valley, for example, companies like Y Combinator many years ago, they made a document called the SAFE, right? I think it's what's the acronym? Something form of equity.
Simple agreement for future
simple
equity.
agreement for future equity. Yeah, sorry. So I think it's kind of a founder-friendly document, right? Aimed where an angel investor, accredited investor, and a startup could, converge in a convertible note very quickly, not have to pay lawyers with thousands of dollars, and everyone feels safe, right? Y Combinator kind of open source issued this document and a few variations of it. You can find a 500 startups version of a KISS, right? Which I think Traditionally, it tends to be a bit more investor friendly than founder friendly, but you can kind of pick your flavor there. So what this really helped in the startup space, right, outside of blockchain, and I think it's why it's important to learn this lesson, why those documents helped was kind of fuel that stage of technology, a startup investment, right, when innovation was moving really quick. So and I'll pass it to you here. I don't want to butcher, but from what I understand, and you had done some work at Cooley, the goal was to create more or less a similar type of document aimed towards, standardizing how people would handle tokens in a way that would, allow them to feel protected and where both parties kind of had a general understanding. So correct me if I'm butchering any of that, but give some context to everybody listening. Like, why was that document important? Why was it something that you guys actually felt needed to be made? And what was the end result? Did it work? Did it not work?
Yeah, so I think the document was important because it provided a new framework for how we think about digital assets and how we can wed the idea of digital assets as something different, but with existing sorry for that, with existing regulatory framework. So the idea was that there should be a bifurcation between how an investment contract is sold and the underlying asset that emanates from it. And so that was the idea behind the SAFT. Now the kind of the result is pretty inconclusive. The SEC doesn't necessarily like it, although they haven't officially kind of said that it's incorrect or wrong. There has been kind of a resolution in federal courts with a Telegram case where, because of how certain SAFs were sold, they believe that the issuance of those SAFs, which everyone agrees is the sale of a security, an investment contract, the SEC and this federal court believe that that sale is the same as the issuance of the digital asset itself. Now the position of the SAFT is there ought to be circumstances under which you can raise money to build a protocol and develop a digital asset and then sell that digital asset as something other than a security, as something that's not a security. As the SEC will tell you, everything is kind of facts and circumstances dependent. But the goal and the reason why it was important was to introduce that conversation of saying, that there should be a distinction here if the digital asset that underlies that SAFT meets certain hallmarks or criteria for not being a security, like a demonstrated use case, like a distributed or decentralized user base. Like a fully operating network that isn't dependent on the kind of what the case law would call managerial or entrepreneurial efforts of a promoter. Now, achieving that line or kind of that distinction has been really difficult, both for regulators and for the industry. And so what I think the kind of the right now, right, what the legacy of the SAFT is, which we still see from time to time. But what the legacy of the SAFT is to have begun that conversation and to try to find a way where protocol teams can strive to achieve something that is intentionally not a security, right? Because I think often what the goal is that what protocol teams want to issue is not a security. That's not their goal. They're not trying to issue a security without complying with securities regulations. What they're trying to do is they're trying to issue something that is not a security, trying to issue something that works differently than a security that has different characteristics and different goals and objectives. And that's what we're seeing now, even if, in 2017, a lot of those protocol teams were trying to just kind of like issue a digital asset and make a lot of money really quickly. I think that objective has changed. And so we're still kind of in the middle of that conversation, still really trying to figure out what are the best ways to issue digital assets that don't have the same type of restrictions and regulations that securities have, because they are by nature something different and ought to be treated and viewed as something different. So we're still working on that, and there's a ways to go on it, but we're hopeful that we'll get there.
For whether you are a student at a university thinking about a project you want to build, or you are aspiring lawyer, right? Kind of thinking of a blockchain as like a path of law that you want to understand, or kind of a point of interest for your career path, or you're just a general investor or an investor from the past. Like, this is a really interesting conversation. This is one of those conversations where we could probably go for the next hour. Like, we haven't even come close to scratching the surface on probably like the real impacts and like in diversity, I think, of kind of how the points this conversation kind of touches, right? Because it's not just a technology, right? Like, when we really look at blockchain, when we look at cryptocurrency, DLT applications, etc., especially when we look at it from a standpoint of of a fundraising mechanism. But in the 2-3 minutes we have here, and again, I really appreciate your time, and I can't stress enough, like, you and me can probably go another hour head to head, and like it'd still have time to like keep going. For the thousands of kids listening to this right now, and one thing that's always intrigued me, and I think I have a very unique insight, or our team has unique insight, where it's like we talk to a lot of university students, and one of the things that really stood out to me in the beginning was that, if you go back 18 months, 2 years ago, it was like I started realizing how many legal students really were interested in blockchain. Like, they were kind of the ones coming into the blockchain clubs or the blockchain organizations, etc. Because I think, again, there's a lot of, not to say conflict, but like, I don't know. I've never been a lawyer, so I can only imagine that like the best case for a lawyer is like something that's like not easy to solve, right? And it's like a little bit complicated, right? And where a future where you guys can really fight for it and kind of battle out the ideas. But if you go back in time, you're going back to school today, like, what advice would you give a student today who's kind of thinking about blockchain, and obviously in your perspective, like from the legal side, like, how would you tell them to think about their approach to it?
Yeah. A couple things. So if you are working on just the blockchain space, let's think about it not from the legal perspective first. A lot of people have really interesting ideas and would like to use this technology to build something really cool, and we see a lot of that. Unfortunately, building cool stuff isn't financeable. And so you've got to think about more than just kind of, I want to build something that's cool. Now, if you just want to build something that's cool, it's great. But in terms of really utilizing the technology and really being able to finance a project that's exciting, what we look for is we really look for people who understand not just the technology, but understand economics, understand finance, and can apply finance and economics and those concepts to their protocol in a way that makes sense. So we see a lot of, we like tokens, and we invest in tokens, but we pass on most of the tokens that we see. I mean, we pass on most of the investments that we see. That's just kind of how it is. But a lot of the token models that we see are just not necessary, right? The question that we often ask is, why do you need a token for this? And often the response is, well, it's a way to, generate user engagement, or, it helps, we've got to have some way to like value the services on the platform. And those things may or may not be the case. But the question is, can you do this with the token? Can you do this without a token? And if you can, you really have to question whether a token is appropriate for you to use in whatever protocol you're building or generating. So thinking about more than just building something that quote unquote works, and rather thinking about something that actually makes sense and utilizes economic incentives and makes financial sense for people who are holding an asset that purports to have value. Those are really important things to think about. And so I would say, really understand economics, really understand finance, understand macroeconomics. A lot of blockchain and crypto is about how we think about value at a macro scale and why that's important. On the legal side, I'd say really understand securities regulations, really understand, do as much as you can to understand how assets are treated. Property is going to be a great thing to think about. Property law, securities regulations, even the UCC is something that's becoming a really important topic in the space with teams that are building out broker-dealer and prime brokerage services in the space. So I'd say focus in on that. And then, if you're on the legal side, you've also got to really take time to understand these protocols, understand why they may be good or bad. Don't try to look at them just from the legal perspective, but try to understand why people may want to use them. A lot of what I do is in talking to regulators and talking to lawmakers is explaining why the use cases are important, explaining why a certain protocol has developed something that it's in our benefit to allow people to use, say without having to, have a Charles Schwab account in order to hold a digital asset and to exchange it. And so you want to understand the space from a multifaceted perspective, so that you can think well about how to apply the law to it.
I will repeat it again. This is a conversation that could easily go on for another hour. Joshua, it's really been a pleasure to talk with you. And, again, for everybody listening, go watch this conversation again, right? There's so many little nuances in here, that might not have poked their head out or it piqued your interest, or you might not have grasped in the first pass, but they are important. Right? There are conversations going on behind closed doors, right? Where people are educating legislators, right? Where legislators are dictating what you'll do next, right? Where projects aren't launching or are closing or never get off the ground because of fears or lack of fear, or maybe something they did 2 years ago kind of come back to bite them in the ass, right? So the legal perspective, and I'll continue to repeat, it just tends to be something that's bolted to this space, right? And you could go back through technology. I've been a part of it. I haven't seen everything, but you can't, you don't need a team of lawyers in the SEC to fight a VR application, right? But if you're building a crypto product or you're building a blockchain product, you may or may not need a use case for a token, or maybe using it as a fundraising mechanism, whatever. You need to understand the details, right? And I think a lot of times, as you mentioned earlier, people will start to go down the path of the project. They have this whole idea. They go get investors, whatever, and then they find out, nope, this is super risky, and I won't do it, right? So it's really important to even understand it before you even kind of go down that path, right? So last word. Again, I know we could do this forever, and I actually hate to go right now. But last word to everybody watching, and again, it was very nice to talk with you.
Yeah, just say, look, this is a really exciting time to be in the space. Everything is moving to digital. Paul Tudor Jones, extremely famous investor, manages a fund, I believe, of over $10 billion, just said that, just took a position in Bitcoin and said that it's more likely that there are going to be more holders of Bitcoin and other digital assets in the next 2 or 3 years than there won't be. And so we're really excited about the future. I encourage everyone to take a look. If you're interested, you should jump in. It's great. Thanks so much for having me.
100%. And guys, go check out Blockchain Capital. If you have a good idea, reach out to these guys. Josh and I were talking before, one of the companies, and some of you guys know from MouseBelt, we invested in, they kind of, I think, after us, or actually think after, and I've heard nothing but great things from the founders. So go check out Blockchain Capital, study up on your legal work, go check out Joshua online. It was very nice to talk with you, Josh. For everybody else listening, we're going 72 hours live. We're having a diverse set of conversations. We hope you guys all enjoy it, and let's keep this thing going. Thanks again, Josh.
Thanks, Patrick.
Stay tuned to learn more about the state of the art in blockchain education and technological development all around the world. Reimagine 2020.